If we are looking currently in the stock market, there's one dominating color, and this is green. Due to very positive news from reduced cases in Europe, stimulus and oil deal around the world, we see that the market is celebrating this currently. If we are looking to the market, you see that the S&P 500 is down about 20%, which is also affected other indexes that are also minus 20%. But from a valuation standpoint, we are at one of the highest points ever. How this comes? Now, here in this vlog. If this is the very first video that you ever saw here on this channel, make sure to subscribe and ring the bell, and also give me a huge like to help the YouTube algorithm to discover my channel and to push it to more investors. Now let's talk about earnings seasons. This is one of the most exciting times since ever. Now we have seen earnings, we've seen earnings that were inflated because, lots and lots of people and in the management of big companies decided to do stock buybacks, which are increasing the earnings per share number. And while companies maybe had relatively flat earnings, the shares were reduced and therefore you had the inflated earnings per share. However, we saw also peak price per earnings valuations, and what it will be very interesting in this earnings seasons will be not how the last quarter was. Obviously this is also a very interesting point. However, it will be bad, but maybe not that bad that maybe some crash gurus are saying it can be, because in the end of the day, the crisis and lockdown started somewhere in March and beginning of March, mid of March, so we see some companies that usually, thrived through this crisis so far. But how will be the guidance? This is one of the most interesting parts, because in the end of the day, what drives companies is the future outlook. And if this is bad, and we don't know how bad it can be, then this will drag companies down very, very much. So what we will need to look for is the earnings, the guidance, and listen to a couple of earnings calls. Obviously, I will cover here a couple of stocks by myself, but if you are investor and waiting for this earnings by your favorite company, make sure to go in through this earnings report sentence by sentence and really look for bad things that can develop. Sometimes this reports can be quite tricky, and also make sure to listen to the earnings call, because there are questions from analysts and investors that can be tricky and management has to answer. Now the second point I want to go with you into is the PE ratio. Now the PE ratio is one of the most used metrics to evaluate companies, right? Or to get a first glimpse of the valuation of the company. Now the price per earnings will be adjusted after the earnings, obviously, right? Because if the earnings are out, new PE ratios are rolling over. And we have this graphic by the Standard & Poor guys, which did this calculation, and they think that the forward PE, so the estimated PE, can be as high as 19. This is a very, very high number that we have seen the last time at all-time highs of the indexes. So this means though we are 20% less from the highs in mid of February, still from the PE and valuation point, we are very expensive. So this means that, and I said this before, but I think this is just the beginning. I said it before, but I want to emphasize this. I think we are just in the beginning of crisis. I mean, this can be bigger than the financial crisis.
To unleash the full power of the federal government in this effort today, I am officially declaring a national emergency.
People are closing their companies. People are taking salary cuts. People are not spending at all. Restaurants, hotels, flights, everything is closed. And as soon as we open the lockdowns, there is some more cases coming up. And what we will do then? Going back to lockdown? Or we are just, let it be. So this will be a big question that our administrations around the world will have to answer. But I know in which direction the financial markets can go in this case. And this is most probably down. I mean, I could be wrong. This is definitely not, let's say, I don't have the crystal ball here and I cannot foresee what will come and what will happen on the financial markets. But I think that, more and more data is coming up. We have job claims, we have unemployment and so many things that will give us more and more data to crunch on and to estimate and to value, right? I mean, lots of people saw this crash and then I said, hey, it's just a small pandemic, we will go over it how we always would, all right? And then we go up and most probably we go down again because these valuations are just, with the new data that is coming in, will be just crashed. And therefore, I believe I'm sitting on the sidelines and just waiting that interesting titles will be there for really cheap money. And this is the beauty about the markets in the current crashes, that, you can really buy cheap things out there then. So stay tuned. And on the other side, let's also talk a little bit about guidance and how the demographics and the consumer behavior will change. So we talked about the earnings, we talked about the valuation, and I want to talk with you about change, and specifically I want to talk with you about kind of climate change. We see more and more digitalization, and this pandemic is actually moving us real quick into the digitalization. So you can imagine that, this was a dream come true, in form of a nightmare, right? So actually, what is happening on the market is that this wave of badness, of bad news and, a very, very serious health crisis is actually pushing us to work from home, to Skype, to use Zoom, to spend more time on the internet, to, watch more Netflix and so on. So we are changing how we will behave in the future, and the digitalization is coming faster. An environment, think about environment. We saw pictures of Venedig that was basically back to green. Everything, you could see the fishes inside the water of the streets of Venedig. This is unbelievable. The air quality is like we had never been using cars, and this just shows us how fast things can change, and change is normal in this kind of crisis. We have seen a big change when we came out of the financial crisis. How banks are getting administrated, what banks can do, what they have to follow as regulations. We may be seeing something, or will see something similar into companies, right? Maybe a new law will say that you need to keep at least 10, 20, 30% of your earnings as balance reserve just in case, because as we have seen, no company could ever have enough reserves to be ready for that and to use all of their cash to such an event. People and companies thought, we will buy back stocks, we will invest in our companies. Now they have to hold their holdings into cash and use them to keep jobs. And this is unbelievable, and this is unprecedented times, guys. And therefore I believe that things will change in the future. So if you're following other vlogs, like for example my yesterday vlog, where I see and introduced 7 companies that I believe that can really great benefit from this overall crisis, and therefore I think that this change is something very interesting as an investor. Also think about, go through your portfolio, right? Go through your portfolio, see which companies will have available business model based on the new situation. Now, we will not jump right back into where we were. We will transit over a couple of months or over a couple of years. Maybe some things don't get even back as usual for good, right? So we never know, and therefore, go through your portfolio, make sure that you are really having some companies like, all the companies that are really invested into databases and infrastructure for the internet, online business, e-commerce, these companies will have a huge future because people now order things from the internet. I think Amazon will absolutely crash their earnings report, and this will be absolutely insane. So, with this said, we talked about the earnings, we talked about the valuation and the consumer and the whole change of this crisis. So make the best out of it. With all my advice can come totally different, but and this kind of things, it's just a couple of scenarios that are possible, and I believe that we are just in the beginning. We are, compared to 2008, 7, maybe in the first 3 months, as the crisis started somewhere in 2017 until 2009, and this, guys, is bigger.